City, traded for about 18 years, managed £140 million in the city, so I've got a little bit of experience managing money. So I want to share that with you and let you understand really how the markets work and how the game of trading really works. Okay, so I'm going to share some insights with you today. Why do traders fail? What do you think are some of the main reasons that traders fail?
They're not managing the risk properly.
Not managing the risk,
Greed.
one. Greed,
And fear.
that's another one. Fear, massive one, massive one. Overtrading, oh that is huge, that is huge. People trading intraday, too many trades. Overtrading can be several things. Overtrading can be too many trades, and overtrading can be too big for your account size. That's both overtrading. Overtrading because it's too big, and overtrading because you're trading too often. That's one of the reasons that people fail. Good, we've had some good reasons here. What other
Well, here's
reasons?
a question. If you only trade when you see double tops or triple tops or heads and shoulders,
That's too
you're not-
rare though.
yeah, that's what I was
That's
saying.
too rare. You can't trade them. Because what we'll do, you see, I'll use the monthly chart to show you. But really, we're not just trading those patterns. So we'll trade from here to here. That phase one will be out for the phase two. We'll be in for that phase one, out for the phase two. We'll be in for that phase one, out for the phase two. That phase one, out for the phase two. That huge phase one, out for this phase two, and then the next phase one. So we are trading more often than those patterns that we talked about. The only difference with these is this is where we maybe would go a little bit bigger. We take a little bit more risk just because these patterns are very, very reliable. When we see a double top like that, we know we're going to get usually a major drop. So again, we do the same, we get that double top pattern, the neckline breaks, we go down here for the phase one, it retraces to those two candles for the phase two. Again, for the phase one up candle retracement, then it falls massively here, and that's all we're doing. We're constantly looking for the major move. Okay, so
You trade
when
that
you're
all
trading
as
a trade.
one trade, not as three separate trades.
No,
is that right?
each of these would be a trade. The phase one will be a trade, phase two would stay out. Phase one will be a trade. We wouldn't actually trade it on the monthly chart, but you can clearly see it on the monthly chart. Yeah, and our indicator would get us in and out. When that phase two starts, our indicator would get us out. And then we'd sit out for that phase two. Then there's phase one here, and our indicators would get us out for that phase two. Okay? One of the things that I know a trader has taught his daughter, that is very, very significant on a monthly chart. He tells her, if you see 3 trades in a row that go wrong, this is what she says, 3 in a row, Daddy, party's over. 4 in a row, Daddy, party's really, really over. 5 in a row, Daddy, the party's really, really over and everyone should go home. And he says, so what if we see 6? She goes, 6? 6 in a row, Daddy? If we see 6, the party should have finished. The police are going to come because it's so late that everyone hasn't gone home. Okay? Now that principle, that's what he's taught her. Let's look at that on the chart. So here's a major uptrend. When you get 2 in a row, you know that we're looking for a reversal bar. Okay? In an uptrend. Here we only get 1, so the market continues up. 1, 2, 3, 4, 5 in a row. The uptrend continues again. 2 here. The uptrend continues. Usually it's more than 2. Particularly on the weekly, you can see this pattern occurring over and over again. Now his daughter's only 3.5 years old. She understands that principle. She doesn't really understand trading, but she does. Yeah, so 1, 2, 3 in a row, 4, 1, 2, 3, 4, 5 in a row. Retracement. It's in the downtrend. 1, 2, retracement. 1, retracement. Nothing really there. You just look for that. I'll go take it over to weekly because I think you'll see it a little bit better on the weekly. You'll see it a bit more often. Just drop it to a weekly chart and you'll see it much more. So I'll do it from here. So 1, 2, 3, 4, a retracement bar. 1, 2, 3 up, 1, 2 down, 1, 2, 3, 4, 1 bar down. 1, 2, 3, 4, 2 bars down. 1, 2, 3, 1 bar up. Yeah, so you tend to get 1, 2, 3. You're looking for that pattern. And some people will just trade that. There are traders who would just trade those candles on those 2 and 3 bar reversals. Okay, that's more of a swing trading style. We would tend to sit through a bigger move than that. But swing traders would trade that, so they might go 1, 2, 3 weeks, hit it hard, pyramid the trade, and get out on the first red bar. So that's another style. You're just going to have very, very good money management on it. But when you're in an uptrend, you're going to get mainly green bars, basically. When you're in a downtrend, you're going to get mainly red bars. And then the opposite bar is going to reverse that trend. Does that make sense? So in a major uptrend, if you look here, starting down here from 96, majority of these bars are green, but when we're in the phase 2, they're red. Majority of these bars are green, when we go into phase 2, they're red. Majority are green, phase 2, they're red. Majority green, phase 2, red. Majority green, short phase 2, sideways phase 2. Majority green, big phase 2. Does a little bit of a bottoming pattern here. Then majority green, 2 red. Majority green, 2 red. Are you with me? So in an uptrend, the majority will be green. And in a downtrend, if we look from the year 2000, multiple red bar, green one, 2 red bar, green one, 3 green, multiple red, 4 green, red, green, red, red. The market starts to come off. 3 green, market comes off. Usually if you get more than about 2 or 3, as he's taught his daughter, that's what she would look for. She would only look for those. If you were trading that style, you would look for 3 or more, and then you'd look for moving the opposite way. But you've got to know the direction of the market in the first place. You've got to know whether it's in a major uptrend or a major downtrend to be doing this. Do not do this on FX. You'll be turning all over the place. You'll get 1 red, 1 green, 1 red, 1 green, 1 red. You lose a lot of money. Okay? So this is the main thing that you'll do. You'll just look for that sequence of candles and then trade the reversal. Yeah, once you know what the major direction is. And you know the major direction because the market continued to make lower lows, lower lows, lower lows, lower lows over a period of time, lower lows. You can spot that over a period of time, and then you can trade that. You can do it on monthly,